What's up, guys? Welcome to Roensch Capital Charts. Today we're taking a look at Apple stock, ticker symbol AAPL, on a variety of time frames in anticipation of the next trading day, Tuesday, May 7th. All right, guys, Apple stock here today down $1.67 per share. That's minus 0.91% in regular trading hours. It is up here about $1.50 or so in the after hours. Listen, as always, guys, I know that that's a sharp move, but as always, you'll hear me say this all the time. You have to take after hours with a bit of a grain of salt, because look at how low volume is. If you're watching this on a phone, you may even be struggling to see that unless you have the resolution cranked up, all the way to maxing out your phone, or 4K, I suppose. This isn't an Apple video. Interestingly, I think us iPhone users, as far as pixels are concerned on the phone, I think it really only adds up to about 1440p. I'm interested to see if we end up with enough pixels for true 4K in the future on iPhones. Anyway, let's take a look at this stock here. That move is on low volume. Take it with a grain of salt. But listen, the reality is it is the real price. So I'd rather see it up versus flat or down if I'm a bull. But we'll see where this ends up, because there is still a little bit of time here in the after hours. Here's what we're going to do, guys. We're going to take a look at the volume profile. We're going to pull out as much bias as we can get. And then we're going to take a look at the self-fulfilling prophecy, those psychological levels that I think that we need to pay attention to, because I know that smart money and funds institutions, right, they're paying attention to them, retail traders, so I want to be aware. Then we'll finish out here with the expected move and the directional bias coming out of the chain. So let's get started. Let's take a look at that volume profile here, the intraday session, right, on the 5-minute chart. What I usually do is I'll circle obvious moves. What I want to do today is just look at the full day and see if anything is out of context. And really what we're doing here, listen, if you're new to the channel, what we're doing here is peeling back a layer, right? What we're doing is looking under the hood to see, does the volume profile support like this bearish move or this bullish move, or does it not so much? Because it's a deeper understanding of the move, truly. So let's take a look. By the way, if you are newer here, my goal is 10,000 subscribers. Apple is today's wildcard stock. So I appreciate you subscribing to the channel, and I'll keep the videos coming. Looking at the open, quite a contextual open, a quick fade in volume. That's something we expect. Really no obvious bias there. This green pop, too much of a risk of fooled by randomness on something like that. Okay, so we move past that. And by the way, what would be big bullish bias? 3, 4, 5 consecutive bars of that same volume. That would be obvious bias there. Too much of a risk of fooled by randomness. Not to mention that candle that it's on is a little bit wicky, okay, which leads me to believe it's a battle bar, a lot of both buying and selling going on. All right, we started to see increasing volume into the low of day, okay, but what's interesting is that this bar here, the actual intraday session low, which saw the peak of that volume, which oftentimes some people might say, hey, that's some bearish bias since volume dropped off on the bounce. Well, to me, I'm uncomfortable actually assigning that, because this bar was so wicky that it's a battle bar, right? There's a lot of buying and selling going on, pumping up that volume, so we have to move on. And then into the close, we saw really a pretty normal increase in volume into the close. I know a lot of you guys are looking at this bar here. That is rebalancing. Okay, it's the first bar after the bell. That's really common on blue chips, especially as of late. The algorithms trigger, and a whole lot of buying and selling occurs as funds and institutions rebalance their portfolios for the day. So you might be sitting there thinking, well, we didn't pull anything out of that. And that's exactly right. The thing is, if you're a bear on a red day, a nearly 1% red day is not a tiny day for a giant stock like Apple. You would ideally at least want to see some bearish bias mixed in, and we really didn't see a lot of that here today. And if you're bullish, the stock price is already down today. So at least in the intraday session, right? So why would you want to look at that and say, okay, well, the volume profile supports the move entirely with massive bearish bias? Ideally, you wouldn't want it to have much bias at all, because that kind of goes against the actual movement, which is what we're seeing. We're seeing basically no bias here today in the volume profile, especially on those moves, in particular to the downside. So let's move on here. Let's start taking a look at the levels, right? Those psychological self-fulfilling prophecy levels that we need to be paying attention to, because, in the very short term, I say this a lot as well, this is all psychology in the very short term. Okay, once you get mid and especially long term, the fundamentals 100% take over. But in the extreme short term, like the context of these daily videos here on this channel, it's all psychology with the single exception of something like earnings, which leads to a quick fundamental repricing typically, and then psychology just takes over yet again. Okay, so looking here at the 30-minute chart, you can see it. I keep it very simple. The white line is the 50-period moving average. The gray line is the 200-period moving average. This morning, we actually gave up the 50-period. We tested it off the open and rejected. That wasn't ideal if you're a bull. Okay, if you're a bear, it's great. In the after hours now, we're trying to reclaim the 50-period, but it's just that. It's an after hours move. The same way I don't trust these pre-market dump-offs, okay, below that level, because the volume's so low, I also can't trust the after hours reclaims. So bulls, what I'm primarily looking for here on Apple tomorrow on the 30-minute chart, I want to see a high volume bounce up and away from the 50 period, reclaiming that as short-term support. Bears. We're just barely above it. We're basically riding on top of it right now. Tomorrow, ideally get back beneath there, see a test of it, testing the break, right? And then rejecting hard on high volume. That could set you bears back up for a downside test of that 200 period on the 30-minute chart, at least sometime in the near term. That would be that psychology of that look, okay, on the 30-minute. Now, moving on to the 4-hour chart here, you can see, guys, I'm not going to spend a lot of time here because the 4-hour, the only thing specific to this are going to be the 200 period and the 50 period moving averages. And you can see that we're currently, based on the current after hours price, it's about 5.25% to the downside away from that top one, the 50 period. So all I'm really watching here is kind of maintenance mode, okay? If I'm a bear, I would like to see that 50 period reclaiming as few whole dollars as possible. Right? I don't want that thing stair-stepping any higher than it needs to, okay? Because ideally, I want as much open space back to the downside to encourage as many bears to go short, at least based on the 4-hour look, as possible. Whereas bulls, you want that 50 period getting upside as quickly as possible, but understand that it's going to take time. It's a slower moving chart. It's a slower moving average on this chart. Okay, so to see this reclaim like 175 in the near term, that would be great. That's all I care about here, really. Now, the most important chart of all, guys, is going to be the daily. Now, the daily is kind of a crazy look right now. After earnings, we were just barely breaking the 50-day moving average. We broke the 200-day moving average, and we're holding it. We tested a wick beneath there today, but we held it. Bulls, tomorrow, the most obvious look possible that I can give you on Apple. Any downside test of that 200-day moving average, I want to see that thing hold. I don't want to give that back up. I want to see that hold. It's currently sitting just above 181. It's a moving average, so have that on your chart, ideally. But I want to see that hold, ideally with a high volume bounce away, pushing away from that level. Bears, a downside break of that 200 period is great, but then in the near term, a retest on lower volume and then a high volume rejection confirms that 200 period is at least shorter term resistance and can set you guys back up for a move heading down toward that like 175, 172.50 region, okay, which is where the 50-day moving average lies, at least currently. Now, implied volatility. As expected after earnings, this is very normal. IV dumped. And it went from in the high range compared to the last couple of months to the mid to low range in the last couple of months. If you own contracts on Apple and you've seen some IV crush, this is your culprit. All right. Understand though, the lower IV goes, the more favorable conditions become for people looking to come in and buy new contracts. Okay, because they're paying less Vega value. Really important part to understand, that volatility aspect of trading options. It's not just a directional game. Not at all, okay? Now, expected move here on Apple. Let's take a look. The next expiration we have on Apple is going to be Friday. We do not have the luxury of daily expiration, so we have to do a little bit of math here, a tiny bit of guesswork, but that's really what trading is, and the people who do it the best make the most money. So the next expiration is Friday's close. The expected move being priced in currently by Friday's close compared to today's close is plus or minus $4.19 per share. Now what we can do is we can divide that by 4 trading days, but we have to add back 50% because that assumes that first number, right, just dividing by 4, that assumes all green days or all red days. So right now in this market, I'm adding back about 50%. That gives us an expected move with a little bit of guesswork by tomorrow's close compared to today's close of $1.57 per share, plus or minus. That's the volatility expectation. By design, guys, expected move does not give directional bias. That's on purpose. That's by design. This is the volatility expectation being priced into both calls and puts by traders. That's important information, especially if you're trading options to help position yourself more effectively. Now you're probably wondering, what about directional bias? Let's finish out with directional bias. We have 1.1 million total contracts that were traded today. That's a great sample size. 683,000 of those were calls. 423,000 were puts, so a call side bullish bias on the overall call per ratio. And if we go ahead and break that down by the short-term speculators alone, the 0 to 20 delta range, 298,000 calls and about 180,000 puts. So a call side bias as well out of the short-term speculators. Listen, guys, hey, if you're getting value out of these videos, I ask you to do one thing. It's 100% free. Takes half a second, please. Leave a like on the video and then get out of here and enjoy your day. I greatly appreciate it, and I'll see you in the next one.